Hey everyone, I just wanted to do a video on the S&P today, or specifically the SPY ETF, and figure out what's going on here. I wanted to do a video yesterday, but didn't get around to it. But yesterday's price action was pretty significant. In fact, the other day, the day before yesterday, which I guess is Monday, this bullish candle, this bullish action right here, I really thought we were going to break out into all-time highs. But once again, the market proves that my opinion doesn't matter. And it's more important to watch what the chart is doing. And yesterday, the price gapped down and continued lower for 3 hours. And mind you, this is the hourly chart of the SPY. And I like to look at the hourly because you get rid of all the noise and you can really see trends and patterns. So we gap down, and then we get this trend line break of support. Support had been sitting around 210.50 for a couple of weeks. So a trend line break is pretty significant. It's like when you're on a boat and you see your boat leaking, the first leak that you see. It's scary and it's important, but it doesn't mean the boat is going to sink. So what you have to do is watch the price action and see what happens. It's just like when you see a first leak, you're going to inspect your boat and make sure there are no other leaks. So the same thing happens. I'm on the hourly time frame and I see this line break. So I'm going to start paying closer attention by going to the minute chart and just kind of watching what's going on. When the trend line breaks, usually there's going to be a sharp sell-off because there's going to be a lot of stops that are sitting right here, those people who want to protect their profits. So the first thing you're going to see is the stops getting hit and the volume increasing. And you want to see the reaction to that. The first thing, whenever a trend line breaks on the downside or when it breaks on the upside, is that there's going to be a retest of the line. It means, for example, in this case, it's going to try to get back above the line here. On the minute chart, you can see there's an attempt to go higher, but it failed, and actually price made a lower low. Okay, but you know it's only a 1 minute time frame. You gotta give it some time to work out its trend. And again here, another minute time frame. It does break above the line again, but again, you get a lower low, and then a lower high, and then a lower low here. So on the minute time frame, it wasn't looking very good. When it made this lower low here, then that's when I start thinking about adjusting my positions. Mostly I'm a credit spread trader, so I start closing out put spreads that are close to the money, that are profitable, and start readjusting those. And if we go back into the hourly time frame, you'll see that given a little bit more time, the market was able to recover the price of the trend line, and not only that, was able to get above the this bar's high price. So yesterday, looking at this, you know, I didn't take this more than as a shakeout, and price continued higher. So it's the first leak. You do have to start paying more attention when that happens. And you know, it closed relatively well, so anything could have happened at this point. Again, you have a high, a low, and then you know, somewhere in the middle when we closed. And again, it's ambiguous. You don't know what's going on. But today here, you have a gap down below the support line, which to me breaks this low, which to me confirms that we are now officially in a downtrend. And last 3 hours here, you see that the price is again trying to retest this line here, but sentiment for me has changed to bearish tone. So let's just start drawing some trend lines here. We got the high around here, and we've got a lower low there. So we're gonna go there, and then I'm gonna clone that trend line because you want to have the same slope on your channel. And let me try and move this up a little bit. Oops. Okay. So here we go. Let's do this. That's my channel. Okay. So that here is my downtrend channel for the S&P. So even though you see it going back up here, you want to see what happens when it reaches this trend line. If we can break and close above it, then this was a quick pullback. But if we hit here and then you see a big red bar, then you probably want to get into some UVXYs. So you don't necessarily want to do anything here. You don't want to take any actions. If you're a spread trader like I am, you might want to start closing positions, readjusting, and opening credit spreads on the top here. But until you get here and you see a negative reaction at this point, you can go ahead and short it, because also around this area again is a retesting of the support line. So let's take a look a little bit further back in history. Let's say we're in, okay, so we're looking at the weekly chart here of the SPY in 2008 2007 time frame, and again here we have a consolidation period, and I'm looking at the weekly time frame. So this is a very long consolidation period, and again you have a trend line break, a significant one where it actually closed below the trend line. You had some other ones here which were insignificant because it actually closed above the trend line, but this was the first significant one. And in this time frame, you'll see that for several weeks it fell, but again what we have is a retest of the trend line over here, a retest of the trend line and a failure, a rejection. This is a bearish engulfing candle where the price is above the previous week but actually ends up making a lower low than the previous week. So this is a bearish engulfing. It was a clear signal to go short on the market, and as history tells us, that was a really good trade to make. Now same thing with our current situation. Here's a retest of the trend line, and it matches right here where the downtrend is. So there's 2 points of confluence, and when you have that, the signal gets stronger if we get a down bar around here. This is where I would go short, UVXY, or for me I would close more spreads, go heavy on the credit spreads, and being resistance here at 211.12. That brings up a important thing I wanted to talk about here. Excuse me. You have options this week. This is the SPY's option chain for this week, March 6th. And if you take a look at the 210 strike, you have quite a bit of volume here. 210. You have 78,000 open puts. And at the call level, you have 28,000 calls at the 211 level. You have more calls at the 212, and you have a lot of calls at the 215. But the 215 is pretty much worthless if you look here. 212 still got some value, but not much. But the 211 still got a lot of value. So these are the two. This is called option support, where once the price dips below 210, because there's so many puts here, the market maker is going to try and push the price above 210. At the same time, when we get above 211, the market maker is going to try and squeeze it back below 211. So we're going to close probably somewhere below 211 and 210. And because the option support and resistance is being respected, I don't think this is a very serious pullback. You don't see a lot of fast selling. You see red bars after red bars and one green bar and then more red bars. That's fast, heavy selling. But what you see here is a very nice flowing trend. So, and you see here yesterday the low was 210.07 before we got a bounce. This was option support. And guess what? When we broke above 211, 211.22, we had resistance and it couldn't go higher. And today we gapped down. The price went almost $1 lower than 210. But again, market makers are trying to push it up. So what's the key area you're looking at right here? Let's see what happens here. That's what you want to see, and kind of take action based on that. Anyways, this is just my thoughts on the SPY at this time. Oh, one last thing. If if we get to this area and we recover, we close, we get 2 bars up, then I say this is, a pretty big shakeout, but still my sentiment would change back to bullish. But right now my sentiment is bearish as long as we stay in this downtrend. When we're in a downtrending market, I tend to not go long on stocks. I don't open new positions. I put raise stops and start collecting profits, and then wait for this trend line to break before looking for long positions to get into again. So anyways, that's my thoughts. Hope it's been helpful.